Yo, what's going on, guys? It's Joey Trades back with another banger video, and today is going to be the start of a series that I want to start producing on this channel. Recapping, every day that I trade, what are my errors, what are my mistakes, more so of a live documentation and trading journal, not for only you guys to learn and listen to, but for myself. So today I was looking at Tesla. Obviously, yesterday being Thursday, we had this big drop after we got, September's rate cuts and unemployment data. It was at all-time highs, making the market crash. We lost a lot of money yesterday in the markets, but I had already kind of known that today was going to be a shaky market. With how much fear we're in the market, looking at the fear and greed index the night before, us being at a 7, I knew that we were still going to be, causing a little bit more drawdown in the market here. So when market was beginning, pre-market, I noticed Tesla, we're below 400s. These levels are rare. We haven't been below 400 in a really long time here with Tesla. Just 2 weeks ago, we were trading around 440, 430. So I see an opportunity in the market for Tesla today, and I was bullish on it while the rest of the market was bearish. So when we seen this pre-market level, we seen it forming bullishly going into market open. But as soon as market open, we kind of got this drop down. Let me kind of make this into a more up close chart for you guys. So we had a little bit of signs of support here. And I warned, here on the live, I seen, okay, we have support here at around 399. I think it was around, 399. And then we had a top at around 402. So we couldn't break above 402. We were hitting before here at 399 going up to 402. And then we came back from 402 down to 399, came back up. But this was the red flag that I noticed immediately at the beginning of the market. Looking at the beginning of the market, we had this high touch here at 402. On the next trend upward, excuse this circle. Let me go ahead and do this neater. Bum, 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 bum. Okay, fix this. I just want to make it as legible as possible. So we had a high right here. First high of the day. Boom. Second high. Already lower than the previous high. Little close to the same level. Now the third high. Starting to trend downwards. So I immediately noticed this bearish trend. And this was first 15 minutes of the market. We're looking at this trend form. I had already seen into the future, but reversals or what I didn't expect and what I learned today, and what I want to remind myself going into future markets, is let's go. I'm just gonna quote it right now. Looking at the economic calendar, there's usually certain events that I found important. Jerome Powell speaking. CPI, PPI. PCE data, very important. And FOMC meetings, important. Now, when I seen today that a Federal Reserve president was going to be talking, I've always see, governors talk, and I never really give it much attention. But I guess today, this individual from the, let me go ahead and confirm that. Okay, New York Fed President John Williams speaks. So Fed President John Williams, once he spoke, he shared with the Q&A or the reporters there that he was bullish, not bullish. He was backing or in favor of a December interest rate cut. So I already knew the interest rate cut decision is a huge factor that the market's looking for. They want to see this interest rate come down. So, obviously we could get more flow and better the economy. Now, when I noticed this, I didn't understand that he was going to be speaking today or that it was going to be that important. So I later found out that he spoke about the market and his opinions on this interest rate cut. Is it going to happen? He backed and supported it, therefore causing the market to reverse. We've seen SPY trending bearishly aggressively on the day. Looked like we were done, had a little bit of spike of hope, and right here around, I want to say maybe 8:30, maybe 8:39 a.m. we got this, announcement of the speech, and you see, boom, this spike of life, and then we have increased volatility here, and then later on going up bullishly. So I didn't know he was going to be speaking in that it was going to be such a big deal. And the lesson that I wanted to learn from here and to remind myself in the future is that although I might not know what the event is, significant or not, I think it's important for me to do more research into these events simply because, maybe it's not an FOMC meeting, maybe it's not Jerome Powell, but maybe, just like we've seen today, there's more information and more value, I would say, in the event than even I would perceive. And that's a tip for me to you guys as well. If you ever see something on the economic calendar, don't really, sweep it under the rug like if it's irrelevant just because it's not Jerome Powell, it's not an FOMC meeting, it's not CPI, PPI, or PCE data. I think it's very significant. Find myself in the future, investigate these events on the economic calendar so you have at least a better knowledge of the playing field. And that's really what I was just talking about in my content. And it's so contradicting today that I fell victim to it. I always say if there's technical analysis, which is what we're doing here on the charts, without any fundamental analysis, you're never going to win. So go ahead and look at all these higher lows here. All these lows forming this bearish trend. Now, when I see this bearish trend, obviously I'm trying to trade against it. So I always would see these strong, short-lived buys. So buying pressure here on Tesla was very, very slow today. You got some right here. Let me go ahead and zoom this chart up for you guys to see. You got some buying pressure here. You got some buying pressure here. You have some more buying pressure here. But all of it being very short-lived. So the two positions that I took today, here on 397 going up to 400, entered that, was up around 60%, and this was the lesson that I learned again. When you're going against the market, me being bullish on a bearish market, right? The trend is clearly bearish, but I'm bullish on Tesla for the day. I said that it's very undervalued. It's oversold below 400. This is an attractive range for investors to want to come in and go ahead and take advantage of these prices, especially if there's investors that were bullish at 450, 460, 440, buying shares at that price. They're going to want to average down, take advantage of this below 400 share price right now. So now when you're looking at, this price point of this share price point for Tesla, that's the mindset that I'm kind of going into it and why I was bullish on it. So I took these positions here, but I was up 50, 60%. But it was short-lived buying pressure. It wasn't nothing that was sustainable. We didn't have any catalyst in the market that I can compare to maybe the economic president, the New York Fed president speaking and backing up that interest rate cut. If I would have known that he was going to speak about the interest rate cut, that would have been the bullish catalyst or the volatility catalyst for the market today. I would have known that that was a thing, Going into that speech, I'm well aware now it's similar to a Jerome Powell effect. For those of you guys that don't know, Jerome Powell is the Federal Reserve Chairman. So when he speaks about interest rates or economic states or the market, we tend to have increased volatility. Today didn't really have a lot of volatility. We just had a straight bearish trend. So looking at this bearish trend, after we got that announcement of that, supporting and backing of the interest rate cut from New York, that's when we started reversing back upwards. But by then, I had already taken losses here, trading against the market, simply because I held too long. And I was greedy. And it's funny, because I've been telling myself all week long, take 20%, take 30%, get out. For some reason, I thought I was going to catch this reversal over here, without any catalyst, any bullish, indicator, any true economic event that would help me. I was thinking that we were just going to find a bottom, similar to like how we did here at 384 and just start reversing. I didn't expect the stars in the moon. I expected, $3, $4, $5 a correction, maybe walking away with an 80% or 90% of trade simply just to make my money back or throw the account up, maybe 30, 40%. So taking into consideration, these trades today, this is what I really learned, trading against the market. When you're going against this this bearish trend in this case, if you do capitalize on these small reversals here, you have to understand that you have to make them short and quick. 20, 30% on a reversal, get out. Beautiful. It's very tempting to hold it because you think you're going to, catch the big upside flip, similar to how I was today. I think the problem today was I was just genuinely misinformed. I didn't have that right, information or understanding of the market, what was happening today, to actually capitalize on this over here. Because if I would have been aware of, him speaking and it was going to be a true economic event, I then would have much rather waited in the markets, not used my capital. You have to understand as well, if you don't have margin for those of you guys that don't know, there's two different accounts that you can use when trading options, at least on Robinhood or I believe in any other brokerage. There's a cash account that is your own capital from your hard earned money, and then there's a margin account where technically you have credits up to this amount, and using these credits whenever you make a transaction with your money or investment in profit, then you'll receive your money back that's already, essentially yours. The profits, Robinhood will credit them to you from the $25,000 credit that you have with them. So they'll give you that your profits in credit and access to your initial investment immediately. Therefore, you have access to the capital as soon as you sell a position. Now, if you don't have a margin account and you have a cash account, you have to wait till the following day to receive back your initial investment and profits. So, if I would have known he was speaking today and I would have known it was a much bigger economic event, I would have held on my capital. I had already taken one trade for about 40% of my portfolio today. That right there took already 40% of the portfolio off the table. I only had 60% of my portfolio left in buying power to execute the next trade. Once I went ahead and, used this next trade, which was over here, profited that other, 40-50% on this one, didn't take it, allowed for some drawdown, got out at break even. If I would have known this economic event was happening today, I would have capitalized on this bottom here and targeted. Now, okay, I myself was watching the speech and I heard him say, I do back this interest rate cut and I believe it will happen. That's beautiful. That's bullish news to my ears. I would have held the capital, not traded these two trades over here, let the market bleed, caught this bottom here, and contracts today, I was just looking at them. They went from $25 today. Let me confirm this, right? I mean, market's still open. We could take a look at these, and it happened all across the board too. Let me go ahead and look at Tesla 397.5 call. Contracts are going for $87 earlier in the market, around 8:15 in the morning, and 9:30 in the morning. They're going for 543. $543 minus your 87, you're looking at $456 in profit. Now let's say I would have just bought 2-3 contracts of these calls here at 87. That would have been around $1,200 profit from 8:15 a.m. to, well, let me confirm that. I want to say from 8:20 a.m., 8:15 a.m. to 9:35 a.m. So about an hour and 20 minutes to make $1,200. And that's why I'm like beating myself up today, but I want to document it. Every lesson that you learn, if you don't document it, it's a waste of your time. It's a waste of the experience. You have to know how to record and document them so you have them as points of reference in the future. So now that I understand that, I really just told myself, okay, next time, review further these economic events, trading against the trend. If I'm looking for reversals or pullbacks against a very aggressive trend, make these profits short-lived. 20-30%, get out. Stick to these rules. Same thing with my drawdown. I did a really good job at sticking to my stop losses today. That I am proud of. I do, reward myself for that. As once we went down negative 20-15%, I'm out of there. Allowing for the maximum drawdown of only 20%. And there's already risk management to the position where the position and the investment of the position is already a certain amount of percentage of my actual portfolio's value. So that's like double risk management if you really look at it from what you initially put into the investment, how much of your portfolio does that equivalent to, and then what are you losing on that investment to even then further down the risk that you're exposing yourself to. But that summarizes essentially my mistakes, what I did right in today's market, and what I hope to learn from them. Unfortunately, this is the market over. My opinion going into next week's market, obviously if we have this hope of this interest rate cut, that's a really good narrative that could push the market, hopefully back up a couple, not expecting a full-on reversal, but I do see maybe a 2-3%, come back up to where we were at. SPY probably wanting to trade somewhere around 6 670, 675 sometime next week. But that's my opinion, and that's really my lessons that I, really learned. I'm gonna go ahead and share this recap with you guys on my YouTube channel. I hope you guys enjoyed and love this content. Want to see more of it. Thank you guys for watching this far. Every day that I trade, I'm gonna try to recap them, share my thought processes, what I did wrong, what I could have done better. So therefore, I'm not just learning these lessons, out of negative losses in capital. I'm actually sharing them with you guys and hopefully giving you guys the positive benefit of learning from me. So you guys, can kind of avoid them. I know that, trading and getting involved in this isn't easy. There's a lot of lack of guidance and, true, I guess, understanding in the psychology behind trading. I feel like a lot of people get confused just looking at red and green candles that don't really know how to, this describes the whole, I would say environment or conditions in the market. You have to understand that this is just a reflection of certain factors. That it's not really too complicated. I feel like many overthink it. So I'm gonna do my best with my content to simplify this and help as many of you guys as possible. But I hope you guys enjoyed it. If you guys are interested in learning any more of that, my DMs are always open here on TikTok at Jerry's Trading or my SoCal Trading Group Instagram page. If you leave a comment or message me, I'll be glad to help you learn a thing or two, about the markets, how I perceive it, and how we generate a profit. This isn't going to immediately help you make a living, but I highly agree that this is a great way to supplement your income and doing something sustainable. This is a very, useful tool to use as an individual, especially as an adult. Learning how to make money with the stock market, it will help you out a lot. But I hope this video was something you guys enjoyed. Look to do many more with you guys. Everyone have a great day. God bless you all. See you guys on the next one. Jerry Trades the SoCal Trading Group, over and out.